Today, we're going to build a complete, systematic approach to trading support and resistance. And the best part? It works for any market you can think of. Stocks, crypto, forex, you name it. We're going to cut right through all the noise and give you a clear, actionable blueprint you can start using right away.
So let's start with the big question, right? Why is it that most traders, even though they know support and resistance are fundamental, they still struggle to actually make consistent money with it? Well, the problem isn't the concept itself. It's the lack of a clear, repeatable method for actually using it. And that's exactly what we're going to fix today. Here's our game plan. First, we'll get the basics down. What are support and resistance? Then, the fun part, a practical 4-step guide for drawing your levels, your battle lines. After that, we'll dive into the 2 core trading strategies, the bounce and the break. And we'll wrap up with what is arguably the most crucial part, risk management, and exactly where to place that stop loss. By the end of this, you're going to have the whole system.
Okay, let's dive right in. At their very core, support and resistance levels are just areas on a chart where the price is highly likely to turn around. You can think of them as the battlegrounds between buyers and sellers. And honestly, understanding these battlegrounds is the foundation of pretty much all price action trading. First up, let's talk about support. The absolute easiest way to think about this is as a price floor. It's simple, right? As the price falls and gets near this level, it starts to look like a bargain. Buyers see a good deal and are way more likely to jump in, while sellers start to think, maybe I'll hold on. This surge in demand, or buying pressure, is what creates that floor, stopping the price from dropping any further. And on the flip side, of course, we've got resistance. You guessed it. If support is a floor, resistance is the ceiling. As the price climbs up toward this level, things start to look a little expensive. Sellers see a perfect opportunity to cash out and take profits, and buyers get a little hesitant. This increase in supply, or selling pressure, is what creates that ceiling the price just can't seem to break through. So it really all boils down to this one simple metaphor. Support is the floor, that's where the buyers are in charge. Resistance is the ceiling, and that's where the sellers take over. If you can just remember those 2 ideas, floor and ceiling, you'll be able to instantly get a read on what's happening on pretty much any chart you look at.
Okay, now for the really practical stuff. How do we actually find these levels on a chart? Forget all those complicated indicators and tools. We're going to use a super simple but incredibly effective 4-step blueprint that focuses only on price. This is how you draw your battle lines.
Here's the whole process, step by step. First, start with a totally clean chart. Seriously, get rid of everything else. No indicators, no noise. Second, go through and identify all the significant turning points. The swing highs and the swing lows. Third, and this part is key, connect at least 2 highs or 2 lows using a horizontal rectangle, not just a thin line. These rectangles become your zones. And finally, step 4 is to simplify. Just clean it up. Get rid of any zones that are miles away from the current price, so you can stay focused on what's happening right now. So now that you've drawn these zones, let's talk about our first core strategy, trading the bounce. You've got your battle lines drawn on the map. This strategy is all about how you react when price comes up to that floor or that ceiling you've identified.
Now, this is a really, really important distinction. So many new traders make this one mistake. They put their buy or sell order directly on the support or resistance line. But the pro move, it's all about patience. You wait for confirmation. You let the price actually hit that level and bounce off it first, before you even think about entering a trade. This one simple act of patience keeps you from catching a falling knife when one of those levels eventually breaks.
But hey, let's be realistic. These levels are not going to hold forever. And that brings us to our second core strategy, trading the break. You absolutely have to have a plan for what to do when the price just smashes right through your floor or ceiling.
And this slide lays it out perfectly. There are basically 2 ways you can play a breakout. The aggressive way is to jump in the moment the price pushes convincingly through the zone. It's faster, sure, but it's definitely riskier. Then there's the conservative way, which is to just wait. You let the price break through and then you patiently wait for it to pull back and retest that same level, but from the other side. This gives you so much more confirmation that the level has really flipped its role.
Okay, so we've covered how to find the levels and we've covered how to trade them. But you know what? None of that matters. Not one bit without proper risk management. So let's talk about the absolute golden rule for placing your stop loss.
This quote right here, this is everything. If you remember one single thing about risk management from this whole explainer, please make it this. Support and resistance are not razor-thin, exact lines. They are blurry zones. Price will often poke into these areas, test them out a bit before it reverses. Understanding this is the absolute key to not getting stopped out of a perfectly good trade.
So what does this mean in practice? Well, here's the rule. Always place your stop loss on the other side of the entire zone, not just right on the edge of it. So if you're buying at a support zone, your stop loss goes below the whole zone. If you're selling at a resistance zone, it goes above it. This gives your trade that little bit of breathing room it needs and protects you from all the normal market noise that happens around these key areas.
So there you have it. We've gone from the absolute basics all the way to a full trading blueprint. We've covered how to draw your zones, how to trade the bounce and the break, and most importantly, how to manage your risk. So the next time you pull up a price chart, the real question is, what are you going to see? A chaotic mess of lines or a clear map of opportunities? Now, you have the tools to decide.